Hi guys, Jonathan here with this week's Charts in Focus, and this week's Charts in Focus is in video format. I've got 3 Aussie markets to quickly get through, and to start off is the Aussie Singapore dollar 2-day chart. Now, don't worry if you're unsure how to go through and look at the 2-day chart on your MetaTrader 4 charts, as I'll include a quick indicator so you can create your own 2-day charts or 8-hour charts or 6-hour charts or whatever you want to create. With this indicator, you can create any time frame you want. So below the video, just keep a lookout for that indicator, because you'll be able to you can add that to your charts and create whatever you want to. Now, looking over to the charts, what should really stand out is that we have a really clear pin bar that sticks out like a sore thumb. You'll also notice that just back to the left, we have a really clear swing support level that also goes back to the left. Now, this pin bar that really sticks out is at a swing low, is also making a false break. Now, the reason it's making a false break, because pin bars are a false break by themselves. If I just explain that super quickly, with a pin bar, price will move down during the session, then we'll get buyers that quickly snap price back higher. So pin bars are a false break in the sell. So when we can look for them at these major levels, it makes them even more powerful. So if price can now break higher and move into the first level, these first sort of resistance levels, and then continue higher, with how choppy it's been overhead with a lot of these highs, depending on how you want to manage that trade, you would have to keep that in mind. So this is the first market, the first Aussie market to keep in mind. The next market is the flip side of this. It's the Euro Aussie dollar. Now, the reason I say it's the flip side, because it's something we have to keep in mind, is if you're going to trade Aussie pairs, you do not want to overcapitalize. Now, what I talk about, and I'll also link this in the same, beneath the same video, if you are going to take trades, if you're going to take trades in the same pairs, now just it's raining very heavily outside, so that'll probably be coming across in the video. If you're going to take trades in the same pairs, the same markets, and you normally risk 3%, if you normally risk 3% each trade, you do not want to be risking 3% on every trade. So you do not want to be risking 3% on the Australian dollar, Singapore dollar, 3% also on the Euro, Australian dollar, and 3% on the next pair we're about to discuss. Now, I'm not saying these are all tradable setups, by the way, but I'm just saying you do not want to be risking 9% on all of those setups. What you would want to be doing is, if they were all setups that you wanted to take, the option would be far better you could still take all of the setups and split this risk. So instead of taking the 3%, only take 1% per trade. So 1% on that trade, 1% on that trade, and 1% on that trade. The other option would be, instead of taking all 3 trades, only take the one best that you like best. And instead of taking these 2, only risk the 3% and risk it all on this one. If that doesn't make sense, let me know in the comments, and make sure that you also read that money management article, that lesson that I'll link up in the below the video. Now, this one, you'll notice that we have a bearish engulfing bar. Now, the other major reason we don't over risk is because often you're going to be trading against the other position. You'll notice we have this huge support level, and it's a massive support level, and then you'll notice that the bearish engulfing bar is not overly large, and it appears when we look just to the naked eye that we have a lot of space to trade into. However, if we zoom out, and it's going to be easier for you to do in your charts than what I can actually show in the video because it doesn't come up real clear. If you go back and actually line up your levels, price is actually moving pretty closely into this engulfing bar, is actually moving pretty closely into a first level. So this is another judgment call on your part, and something you'd have to look into and consider what you'd want to do. The last one, and something I will be looking at really close to this week, is the Aussie 200. Now you'll notice that I've been waiting and watching for this to happen for quite some time now. You'll notice that I have these levels pre-marked, and I've had this top level mark now for quite some time. You'll notice that we have price has been stuck and contained within this level for quite a while. Price had been moving sideways within this boxing area for quite some time now. And then all of a sudden, price has hit this level, this support, and just smashed higher. Now, if price can make a move back and rotation, any sort of rotation, back into this potential support and a first test back into this potential support, it would be a huge level to look for long trades to get with this strong momentum and major level. Now, if I flick over to the 4-hour chart, intraday chart, and show you the type of momentum we would be trading with, it would be huge momentum, and you've just seen the daily level we will be trading with. So we would be, especially on the 4-hour, 1-hour, 30-minute chart, we will be trading with a huge trend and at a major daily level. So this is a huge watch, especially for myself. This is a huge level to watch for any sort of pullback, to get long and watch for long trades this coming session and over the next week or even two at this major level. So if you've got any questions, make sure you read those two lessons, especially the money management lesson, and if you've got any questions, just post them below and I'll get back to you as soon as possible. Have a great week. Stay trading.